Good day, everyone. Good day. Can you hear me? Can you hear me? If you can hear me, please drop a comment. You're welcome to today's live stream. You're welcome. You're welcome. You're welcome. Be glad to have you in this class. If you have any question or any pair you want me to analyze, let me know in the comment section. If there's any pair you want me to analyze, let me know in the comment section. We're so excited to have you in this class. Has been trading this week. I hope it's been profitable. I hope it's been profitable. I hope you're making progress in your trading business. You're welcome. You're welcome. I'm here to educate and also encourage you. To educate and also encourage you to keep going, keep pushing, never give up. Never give up, keep pushing. As the scripture says, keep knocking, keep seeking, keep seeking, keep knocking. Keep seeking for knowledge. Keep seeking for knowledge until you find truth. Until you find that system that suits your personality. Never give up. Trading can change your finances forever. It can change your financial status forever. Never give up. Never give up. Can you hear me? Can you hear me? Can you hear me? If you can hear me, drop a comment, drop a comment, drop a comment. Also confirm you can see my screen. Confirm you can see my screen. Good morning, Debicom, Peps. Confirm you can see my screen. Yeah, never give up, keep pushing. Winners don't quit. You have to approach the market with a winner's mindset. Winners don't quit. Any question, any pair, let me know in the comment section. Okay, let's start by looking at the calendar for today. I think we just have one major news from the United States, and that news will be released by 2:30 p.m. Nigerian time. Unemployment claims. The previous is 216K, and the forecast is 219K. 219K. It means they are expecting that's an increase, right? That's an increase from 216 to 219. So if the actual is less than the forecast, that will be positive for the dollar. And if the actual is higher than the forecast, that will be negative for the dollar. What is unemployment claims? It is used to measure the number of individuals who filed for unemployment insurance for the first time during the past week. So if the actual is less, that will be positive. Okay, but if the actual is higher than the forecast, that will be negative for the dollar. Okay, so you could decide to wait for this news to be released. Okay, before you trade our dollar pairs. Most times when the major news is being expected, price just goes into a range before the news is released. So you could wait for the news to be released, or if you insist on taking any trade before the major news, ensure you reduce risk. I always advise you could risk 50% before, 50% of your daily drawdown before the risk. Then after the news is released, if you see your setup, you can risk the remaining 50%. Okay, so that's my take. So let's go straight to the chart. If you have any question and any pair you want me to analyze, let me know. So we'll start with dollar index. Dollar index has been bearish since the market opened this week. It's been bearish. It's been bearish. So it's Monday candle, Tuesday, Wednesday, Thursday. Okay, so it's been bearish, and this relative equal low could be the reason for this sell. This relative equal low could be the reason for the sell. And you can see on Monday, we had a candlestick pattern that formed, okay? a bullish reversal pattern, which is a bearish hammer. And you advise that when you see a pattern like this, you wait for the next candle to close bullish before you buy. But as you can see, Tuesday candle closed bearish, which indicates that the bears were still in control. Okay, the bears were still in control. Now, there was an attempt at this point to sweep the liquidity that was residing at this relative equal low. That they didn't achieve. But as you can see yesterday, because the normal suited traders would have executed buy after the formation of this hammer candle, and their stop losses will be residing at this previous low. And also we had traders, okay, some traders executed buy from this point, and their stop losses will be residing at this previous low. Okay, so they've swept the liquidity. So with what I'm seeing here on dollar index chart, I think dollar might go bullish anytime soon. Dollar might go bullish anytime. Reason being that the liquidity that's residing at this previous low has been swept. And also, if you apply your Fibonacci from this swing low, you can work with this from this swing low. Let's work with this. If you apply your Fibonacci from this swing low, okay, to swing high, you can see that price is currently at an extreme discount. Even if you decide to work with this low, this swing low, you see that price is below equilibrium. So first, I'd rather risk buying the dollar than selling. Okay, this, as far as I'm concerned, is not the right time to sell dollar. It's not the right time to sell dollar. If you want to sell dollar, you should wait for retracement to a premium area. Okay, wait for retracement to a premium area. Once a bullish reversal pattern comes on dollar index, I would be going bullish on the dollar. I would be going bullish on the dollar, waiting for a bullish reversal pattern to form on a 4-hour time frame or 1-hour time frame. Now, you see what happened last night after the close of yesterday candle. If you go down to 4-hour, you would see we had a bullish reversal pattern, and after the formation of that bullish reversal pattern on 4-hour time frame, most retail traders would have bought, right? Those of us who have been waiting for opportunity to buy, immediately we saw this pattern formed yesterday, this inverted hammer, most of us would have entered buy, and our stop loss would have been at the low of this candle. So what I think they did this morning was to sweep the liquidity residing at this previous low. Okay, I think that's what has played out this morning. So I'm waiting for a bullish reversal pattern to form. If the current candle closes strongly bearish, I'll wait for the next candle to close bullish, okay, before taking a buy on dollar index. Like I said, if you want to buy, you should wait for price to pull back to a premium area. We have this premium. You can see at this point we have a fair value gap. So if you're considering selling, you should wait for price to pull back to this fair value gap. Okay. Okay, or this. Okay, this fair value gap. These are the areas you should be considering selling the dollar if you insist on selling dollar. Okay, so you can see these highs here. See these highs, this relative equal highs, as areas of liquidity that they might go for. And also, after sweeping this liquidity, there's a high probability they will fill this fair value gap. You can see. So that's my take on the dollar. I am bullish on the dollar today. I'm bullish on the dollar today, but I'm waiting for the right setup and the right time to execute the trade. Okay. Question, let me know in the comment section. Any pair want me to analyze, let me know in the comment section. Mr. Peps, good. Okay, I'll look at that in a few minutes. Okay, let's look at yen basket. Yen basket. What was the trend for yen? All right, so let's start with the daily. As day traders, you start your analysis using the daily time frame. Your analysis should start from the daily time frame as a day trader. Okay, your analysis should start with the daily time frame, and it's best to analyze the market before the London session. Analysis is best done as a day trader. It's best done after the close of the daily candle. That's the best time to do your analysis. It's just unfortunate that most day traders don't analyze the markets after the close of the daily candle. They wait for London session before they analyze the market, and that's why they are struggling in the market. The analysis should be done. I don't sleep until the market closes. I don't sleep until the daily candle closes. I have to do a pre-market analysis at 11 p.m. Nigerian time. That's why I'm always awake till 11. I'm always awake. So after I've done my analysis for the day, I go to bed. Okay, so let's go. Okay, let's start with the daily. You can see yen has been in a range for some time. It's been in a range. Yesterday candle closed as inverted hammer, and today so far it's been bullish. So what has happened on yen now? See what has happened on yen. They've swept. The first thing they did was to sweep the sell side liquidity. Sell side liquidity was residing at the of yesterday. Most retail traders have executed buy after the formation of this candle, and their stop losses will be received at this high. And many also would have executed sell at the high of this candle. Many would have executed sell, and their stop losses will be residing. So they've swept buy side and also sell side liquidity this morning. That's the first thing they did. So let's go down to 4-hour. Okay. So you can see the pattern we had on 4-hour at this point. This is an hammer. This is an hammer. Okay, so it's either price we pull back. You see this fair value gap we have here. It's either price we pull back to come fill this fair value gap. This would zone to consider selling, or you wait for a breakout from this support. Selling after price fills this fair value gap, or price breaks out from this support. And if price breaks out from this support, its next target will be this low. That's my take for yen today. I'm bearish on the yen. I'm bearish on yen. I'm bearish on yen. Look at what we have here on the daily time frame. You can see the structure here is bearish. You could also apply your trend line. Okay, you can see that the structure here is bearish. You can see that flow with the trend. You can see the structure is, apply your trend line. You would also see that yen basket is still bearish. It's still bearish. So you look for a good zone to enter sell. It's still bearish. Still bearish. Yen is still bearish. Still bearish. Gold. Okay, we'll look at gold in a few minutes. Okay, so let's start with GBP USD. I believe you all can see my screen clearly. Okay, so what's happening on GBP USD? Let's start with the daily time frame. Okay, so with our average strategy, if you calculate, get your average strategy, you would see on the market is currently trading the average price for the day for yesterday candle. Okay, it's trading above the average price. But as you can see, if you apply your Fibonacci, okay, if you apply your Fibonacci from this swing high to this swing low, you can see that the market is at extreme premium area. And at premium, you don't look for opportunity to buy, you look for opportunity to sell. At premium, you look for opportunity to sell and not buy. Okay, so based on what we have on the daily time frame, I'm looking for opportunity to sell. I'm looking for opportunity to sell. I believe this breakout we experienced in the market yesterday was to sweep the liquidity, because after the close of this Monday candle, someone like me, I took a trade, I took a sell on GBP USD after the formation of this shooting star. And what happened? My stop loss got hit. My stop loss got hit. Okay, so most retail traders would have executed a sell after the formation of this shooting star on Monday. And I believe that is the reason for this breakout. Okay, to sweep the liquidity residing at this previous high. And at this point, if you go down to 1 hour or 15 minutes time frame, there was a fair value gap here. There was a fair value gap here, I think, on 1 hour or 15 minutes time frame that needed to be filled. I think that is the reason for this breakout also. Let's just confirm. Let's go to 4-hour time frame. Let's confirm that. Let's see what we had on 4-hour time frame at that point. Okay, so on 4-hour, you can see this fair value gap on 4-hour time frame. Can you see this fair value gap? This is another reason for that breakout. They needed to come and fill this fair value gap, and I think they filled that gap. The market is currently in that. You can see that. You can see. So I believe that is another reason for that buy, to sweep the liquidity that was residing at this previous high, and also to fill this fair value gap. And this fair value gap has been filled. This fair value gap has been filled, and you can see the pattern that is forming. If this candlestick closes as a shooting star, if it closes as a shooting star, that will be the right time to look for sell. I think this candle will close by 2 or by 3 p.m. That will be the right time to look for sell. That will be the right time to look for sell. Buying GBP USD right now is at a very high risk. The only reason you want to buy GU is FOMO, fear of missing out. Fear of missing out. You cannot buy from this point. This is where you should have entered buy on. You can see this pattern here. If you go down to lower time frame, after the formation of this candle, this was Tuesday. This would have been the right time to buy. Let's see what we had on 4 hours after the formation of that hammer candle. Let's see the pattern we had. You can see the pattern we had here. We had an hammer, bearish hammer, and after the formation of a bearish hammer, you're advised to wait for the next candle to close bullish. The next candle still closed bearish after sweeping the liquidity, because the normal street traders would have executed buy after the formation of this candle, and their stop losses will be residing at this low. So the first thing they did was to sweep that liquidity. Okay, and that's why I always advise that when you are setting your stop loss, if you had executed a buy using this candle, your stop loss should be at least 10-15 pips below the low of the candle. 10-15 pips below the low of the candle. Okay, it's very easy for them to use this low as liquidity. Okay, it's very easy. So after sweeping the liquidity, this is where you should have entered the trade. The rule is, after a formation of a bearish hammer like this, wait for the next candle to close bullish. The next candle still close bearish. You wouldn't have executed a trade. You would have waited for this candle to form. So this is where you should have bought GBP USD, and your stop loss, you would have set it maybe 10 pips, because this low becomes the new level of liquidity, sell side liquidity. So your stop loss should be at least 10 pips below the low of this candle. So you would have risked 40 pips on this trade, and I always advise risk reward of 1 to 2. So 40 pips, you go for 80 pips, and the market did over 140 pips yesterday. I missed this move. I took a sell on GBP USD. I took a sell on GBP USD. I'm following my system. I'm following my trading plan. Okay, I don't trade against my trading plan. Okay, it's either the trade hits my SL or hits my take profit. It's best to follow your trading plan. The loss that you make when you follow your trading plan is a good loss. Okay, the loss that you make when you follow your trading plan is a good loss. Okay, the loss that you make when you go against your trading plan, your trading rules, is a bad loss. When you go against your trading rules and you make loss, it's a good loss. Okay, it's a good loss. Okay, it's a good loss. Always stick to your trading plan. Profits that you make when you trade against your trading rule is bad profits. Profits that you make when you trade against your rules is bad profits. Bad profits. Okay, so that's my take on GU. I'm looking for sell, and if I'm selling GU, you see, I'm expecting price to pull back. There's this fair value gap that we have at this discount area. This will be my first target for GU. This will be my first target for GU. This will be my first target. Price should pull back to a premium. Price should move back to premium. Okay, so this is where I'll be looking for buy opportunity on GU. Okay, let's move on to EU. EU. Let's start with daily. Okay, so EU also, if we apply our Fibonacci, that's the first question you should ask yourself. Where is price? Is price at premium or discount? If you apply your Fibonacci from this swing high to this swing low, what do we have here? Price is currently at a premium area. Now, if we decide, we could also decide to apply our Fibonacci from this We could decide to apply our Fibonacci from this swing low to this swing high. Okay, we could also decide to work with this swing high. This is the most recent swing high and swing low before this buy. Swing high, swing low. Price is expected to pull back from a premium area, but as you can see, it broke out from the premium area. It broke out from this zone. This is where price was supposed to pull back from this area, but it broke out from this zone, this area. Reason is that it needs to come and sweep the liquidity residing above this previous high, this relative equal high, and also we had stop losses at this relative equal high. I believe that is the reason for this breakout. Okay, that's the reason for this breakout. Now, before you sell, you need to see a bearish reversal pattern print on the chart. You don't just execute a trade. If you want to sell, a bearish reversal pattern must print on the chart. I don't care what strategy you're trading with. If you want to buy, a bullish reversal candlestick must print on the chart. That is why I don't use pending orders. There must be a confirmation. A candlestick pattern must confirm the change in trend from bearish to bullish or from bullish to bearish. Okay, so price has broken out from this relative equal high, also has swept this relative equal high. So what I'm looking out for is a bearish reversal pattern to form on a 4-hour time frame or 1-hour time frame. So on 4-hour, it's still bullish. On 4-hour, there's a breakout from this resistance level. Let's see what we have on 1-hour. Okay, so on 1-hour, also previous 1-hour candle closed strongly bullish. You can see yesterday, after the close of this candle, yesterday, most retail traders, this was around 7 p.m. Yeah, 7 p.m. Nigerian time. 7 p.m. Nigerian time. Most retail traders would have executed sell. And where would they have their stop loss? Their stop loss would be at this previous high. That is where most retail traders will have their stop loss. So what have they done this morning? They've swept the liquidity. Okay, and for those who said their stop loss, few pips above this high also, they've also swept, liquidity above these highs. Okay, so all I'm looking out for is a bearish reversal pattern. That's what I'm waiting for right now to form on 1-hour or 4-hour time frame. Okay, so 15 minutes has already formed. This is a shooting star on 15 minutes. 15 minutes is set for sell, but I like to work with the higher time frame pattern, 4-hour or 1-hour time frame as a day trader. So 15 minutes is set, but I don't execute my trade based on 15 minutes candlestick pattern. I use the higher time frame. Okay, I use the higher time frame. So I'm waiting for 1 hour. If the current 1-hour candle closes bearish or the next 4-hour candle closes bearish, then that will be the right time to look for sell. That will be the right time to look for sell. So once the bearish pattern form, I go down to lower time frame to identify structure. There has to be a shift in structure. For example, if I'm using my 4-hour time frame candlestick pattern, I'd love to see a bearish reversal pattern. I love to see a shift in market structure on a lower time frame, 1-hour time frame or 15 minutes time frame. Okay, I don't just use the candlestick pattern for execution. Okay, I need to go down to lower time frame to also ensure that there is a shift in market structure on the lower time frame. Okay. Okay, so which other pair? Okay, good. Let's see gold. Let's start with the daily time frame. Please, if you're yet to give the video a thumbs up, please give it a thumbs up. Give it a thumbs up. And if it's your first time joining the live stream, first I want to appreciate you for participating. Please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. You get notified by YouTube. I have very good plans for every one of you participating in this live stream. Next year will be a great year for every one of you. Next year will be a great year for every one of you. By 15th of this month, I'll be closing for this month. Okay, 15. My last trade for this year will be the 15th of this month. I'm going to go on break from the 15th. Okay, then I'll resume by 10th or 15th of January. 10th or 15th of January next year. Okay, I have great plans, great plans, great plans. You all just be prepared for a great year, a great 2026. You all be prepared. Don't spend all your money this. Don't do that in December. Save for next year. Save for next year. Save for next year. Do not do that in December. Everything you've gathered this year, don't exhaust it on just partying. Think of investing. Investing. That is the only way to amass wealth, investing, not by just consuming. Okay, so save for next year. Save for next year. Next year is going to be a great year. It's going to be a great year. Okay, so on gold. So you can see the pattern we have here. These are bearish reversal pattern. The first thing they did on gold was to sweep the liquidity residing at this previous high. This is the major reason for this buy. This buy from this point. The goal was to come and sweep the liquidity, because after the formation of this candle, most retail traders have executed sell. And for those who are greedy, because if you had executed sell after the formation of this shooting star candle, you should have made at least 1 to 3 risk reward. So why are you still holding the trade? Well, most greedy traders, okay, will still have their trade open, hoping that this trade will go it maybe 5,000, 10,000 pips. Okay, so their stop losses will be residing at this high. So the first thing they did was to sweep the liquidity residing at this previous high before, and you can see the pattern that formed after. Okay, so this was on Monday, no, Tuesday. This was on Monday. Okay, on Monday, after the formation of this candle, this would have been a good sell. If you had sold on Tuesday, you would have made some good profits here. This is about 600 and something pips. 600 and something pips. So you would have made good profits. And you can see yesterday candle, Tuesday candle, hanging man, yesterday shooting star. So all the patterns here indicates that the bears are showing up strong in the market. So if we have more bears in the market, what should you look out for? You look for sell. Price is currently at a resistance area. Okay, price is currently, and you can also see if you apply your Fibonacci from this swing high to swing low, where is price now? Is price at discount or premium? You can see price is at premium. Price is at premium. You can see we had this fair value gap here. This fair value gap got filled at this point, and after it got filled at this point, the normal retail traders would have executed sell. Stop losses would be at this high, and what they did was to go for the liquidity. The stop losses residing. Okay, so what I'm saying here on gold should sell. Gold should sell. Okay, and you're selling gold, your first target, you can see this tiny fair value gap here. There's a tiny fair value gap here. There's a high probability they will come fill this fair value gap. So that should be your first target for gold if you want to sell. If you want to sell gold, and also if you calculate, if you get the average price for yesterday, the market opened below the average price. The market opened below the average price, which indicates that the market sentiment is bearish. So you should look for sales. That's my take on. The only thing that will make gold buy will be fundamentals. That is, if the news comes out negative for the dollar, then that's the only reason gold would buy. But technically, gold is supposed to sell. Gold is expected to sell. It is only the news, the major news. That is, if the news comes out negative for the dollar, we would see buys on gold. Okay, it's only the fundamentals that will influence gold to buy. Any question? Any question? Is there any other pair you want me to analyze? Let me know in the comment section. Is there any other pair you want me to analyze? Let me know in the comment section. Let's see GJ. GJ is selling at the moment. Remember, I said yen is likely going to pull back to a premium area before going bearish, and that is why GJ is selling at the moment. That is why GJ is selling at the moment. So what played out today in the market? You see, the first thing they did after the close of this candle yesterday, this was around 9 p.m. Nigerian time. Yeah, this was around 9 p.m. Nigerian time. After the formation of this candle, most retail traders have executed sell. Most retail traders have executed sell, and their stop losses will be residing at this previous high. What did they do this morning? The first thing they did this morning was to come for your stop loss. Okay, they swept the liquidity residing at this previous high. You can see, and they started pushing the price down. And the shifting market structure occurred at this point. So if I want to buy GJ, I would love to see price. So I'm going to apply my Fibonacci from this swing low on 1 hour. Price should be at a discount area on 1 hour. Okay, so I would apply my Fibonacci from this swing low to this swing high. So I would love to see price pull back to a discount area. Okay, I would love to see price pull back to a discount area, which is below level 50, before looking for buy opportunity on GJ. Okay, right now GJ is bearish. Okay, but my bias on GJ still remains bullish. My bias on GJ still remains bullish because yen is still bearish. Structure-wise, yen is still bearish. Okay, so I'd love to see price pull back to a discount area. If at this discount area, a bullish reversal pattern forms, I will go for buys on GJ. I will go for buys on GJ. Any question? Is there any other pair you want me to analyze? Is there any other pair you want me to analyze? Let me know in the comment section. Let me know in the comment section. Any pair you want me to analyze, let me know in the comment section. There are no questions. I would have to end the session. Any question? Good morning, Mr. Caller. Good morning, sir. Any question? Do you have any question? Is there any other pair you want me to analyze? Let's see Euro or C. Let me analyze Euro or C. I know some of you trade Euro or C. Let's see Euro or C. Euro or C. Okay. Euro or C. So the guys, Euro or C yesterday should be bullish. Look for buys opportunity on Euro or C. Buys opportunity on Euro or C. Okay, so I think it's the right time to look for buys on Euro or C. Let's see the daily. Okay, so you can see first is price at premium or discount. On the daily, we can see price is currently at discount. You cannot sell at discount. This is where you should have sold. This is where you should have sold. You cannot sell at a discount. You can't sell at discount. It has swept the liquidity residing at this previous low. Bullish reversal pattern, I think, has formed on 4-hour. So you can see the pattern. If the current 4-hour candle closes bullish after sweeping the liquidity residing at this low, best time to look for buys. Best time to look for buys. If this current 4-hour candle closes bullish, you go down to 1 hour 15 minutes and ensure there's a shift in market structure. Shift in market structure, mitigation, or liquidity sweep on a lower time frame. There should be a mitigation or liquidity sweep. So you can see this is mitigation. You can see this is a respected low. This low respected closed above this previous low. Okay, so this is a mitigation. Okay, on 1 hour time frame, then on 15 minutes, there should be a shift in market structure. You can see that. Can you see that after the mitigation, we had a shift in market structure at this point? That tells you EA is set for buy. It might pull back to come and fill this gap it's created here. It might pull back to come and fill this fair value gap, or just pull back to test this mitigation block. It might just pull back to test this mitigation, because mitigation comes before fair value gap. If you're considering the PD arrays, price delivery arrays, mitigation comes before fair value gap. Okay, so this mitigation block might hold price. Okay, so that's it for Euro Aussie. It's a buy. Euro Aussie, it's a buy. It's a buy. It's a buy. All right, there are no questions, so that will be all for today's live stream. I appreciate every one of you for your participation. Please, if you're yet to give the video a thumbs up, please give it a thumbs up. And if it's your first time joining the live stream, please do subscribe to the channel. I wish you all a profitable trading day. Bye for now.